Hey
Hello.
guys, this is Chris Mincolla with the Mincolla Group, Real Estate Professionals at West USA Realty. And I'm here with Evan Einhorn, owner and president of Modern Home Lending, mortgage brokerage. And we are going to give you some tidbits that are going to be super important for you to know now and for the next few months as we move through this crazy time of the coronavirus. And we want to go over some really good information that you're going to want to know about real estate and lending and mortgage industry. So, Evan, I think
Yeah.
we've got our outline here. Why don't we just kick it right off with the idea that, you know, from what I'm seeing, we had about a 30% drop off, like I said last week, in showings through our Showtime
Right.
system. And we also saw about the same as far as the inventory shift. Um, so we've got, but the good thing is, I will say for us, we've still got a lot of demand. We're still working with buyers. We're still working with a couple of sellers, and we're, our escrows are full. It's just a matter of getting them through and making sure that things kind of work through the next couple of months, right? We're at least that's the way it seems.
Yeah.
Yeah. So,
I always go back to supply.
where'd he go? Where'd he go? Evan, you there? There you are. Okay. There you are.
Ugh.
What happened?
Let's restart. I'm sorry.
That's okay.
I'm gonna. I'm gonna. Okay. I put my phone on Do Not Disturb. I got a call.
Okay.
I'm sorry. This has been a nightmare.
That's all right. Well, that's fine. You know what? We'll
Okay.
keep going. Okay.
Okay.
So, sorry about that, guys. Super important stuff, though. Stay tuned. You'll want to see this. I promise.
Yes.
So,
Yes.
Evan, can you explain to us a little bit about what's going on and the way mortgages work and why the next 30 to 90 days are probably going to be a little turbulent, but then if people plan ahead or they stay focused right now on what they're trying to do with whatever, buying a house, selling a house, whatever, everything's going to be fine. We'll actually maybe even come out a little bit better with rates.
Yeah. Yeah. I saw an analogy the other day. You said turbulence. I saw an analogy that, hey, realtors and loan officers, it's just like the air traffic controllers,
Yeah,
and they're trying to bring all the pilots in, and unfortunately the coronavirus is a mess of a storm,
right.
because it impacts. It's a health pandemic, but it impacts the financial markets. It impacts people's jobs, like across the board. Everyone's impacted directly or indirectly.
Yeah,
So as far as the mortgage markets go, um, you know this week the government said, hey, we're going to buy unlimited mortgages. That's helping conventional rates stay low. Although FHA via USDA, so government loans. So maybe if you have a score in the lower 600s or 500s, or you're a veteran, those rates aren't actually staying quite as low.
okay.
Now, those might change. They're still relatively low, like they're lower than they were a year ago.
Right.
But we might see some changes over the next 30, 60, 90 days that, if you're under a 640 score, it might be a little tougher, to get a loan. That's not going to be a permanent thing. It's going to be a temporary thing while people, these lenders and servicers take a step back because, unfortunately, over 3 million people filed for unemployment and lost their job.
Yeah, guys, if that's happening to you right now, prayers are with you, and you know, it's a tough time for everybody.
Yeah, I'm trying to be optimistic because, you know, I think the worst week in the recession before, there was like 600,000 or 700,000 people that lost their job in a week, and this was over 3 million. Obviously, it impacted us very quickly. The market reacted quickly, employers reacted quickly. I'm hoping that we can get out of this mess quickly too. As soon as things start going up, hopefully. But basically, lenders are worried about, hey, people are, have lost their jobs, even if it's a temporary thing, even if it's a two-month layoff, that could still impact your ability to repay the mortgage. So high level FHA VA loans might become a little tougher, or there might be extra rules. You know what I mean? I'm not saying you don't qualify. We still have lenders that go down to 500 credit score. So it's more important than ever to work with a mortgage broker because we have 18 different lender options. I have a friend that works at one specific mortgage lender. They made their minimum credit score requirement 660 across the board.
Right.
You know, which is easier because it's, you know, either you're above or below it. It's not like, well, are you below it with this and that? But that's where we come in and, you know, talk to us and we can still help you because a lot of people are still buying.
Yeah.
You know, we had a couple buyers that had to compete with multiple offers this week, you know.
Yeah.
And like we talked about, it's the supply and demand. It's not like, yeah, less people are looking at homes for sure and understandably, but also a lot of less people are listing homes.
Right.
So
yeah, and I can understand people being a little leery right now, but a lot of it's education, right? I mean, if you bought a house 2008 and you're looking now like, oh, it wasn't that bad now, right?
Right. Yeah, I mean, there's a couple of things, and I'll go into some of the stats that I know you and I are big fans of Barry Habib. He's a expert on the financial market.
Yeah.
And he throws out this stat a lot because it's very impactful comparing to '07. That, well, first off the bat, you know, just because we're going into a recession, which we are, doesn't mean it's a real estate recession. So previous to the last recession, real estate values went up almost 1% in the previous 4 recessions on average.
Right.
So stock market recession does not equal real estate recession. Definitely something to keep your eye on, and that's why we're doing these talks, just to keep everyone updated. But the big thing, couple of big things now. One, people weren't getting weird mortgages 2 months ago. You know,
Right.
you couldn't just state your income and get a home. You didn't have people that were buying 5 investment properties with 0 down, which you could do back in the day. And then 2, the rent, the inventory we talked about, there's just not a lot of inventory on the market. Now, the only way I would see that get crazy is if this lasted a year and a half, yeah, you're going to see an impact. I don't foresee that. You know, call me an optimist, but most people don't expect it. You know, yeah, it's going to impact our stock markets and all that for that long, but I don't see us staying inside for a year and a half.
I'm hoping, obviously, we're probably not going to have a vaccine for several months, but next week we're supposed to get some real good data on therapeutics. So, you know, obviously those are going to be some medicines that we can use to get people through this. I think another big thing is going to be when we actually look back on all the data, what they're saying a lot now is the idea that, yeah, we're seeing deaths and that's tragic. You know, obviously, just like the flu, you know, when we see flu deaths, but when we look back at those people that get tested that actually already have antibodies that had it and didn't know they had it, or they got a little sick or got sick and got through it, you know, as opposed to those who need to be on ventilators and things like that too. So there is like this whole other segment that hasn't even kind of been computed yet.
Right.
And which will bring those numbers way down to maybe like flu numbers.
Right. And there's so much in the unknown.
Yeah. Right.
Yeah.
We don't have crystal balls here. We're just going off of what we know and what we're seeing.
So.
Evan, real quick, kind of give us a breakdown though, a little bit at the street level of how a mortgage works and what the issue is right now with servicing and stuff like that, and how that works.
Yeah, so the government solved one problem, was conventional mortgages. No one, just like everyone pulls out of the stock market, not a lot of people want to invest in mortgages right now. Not saying real estate, but specifically mortgages, because they don't want to invest in mortgages because you might lose your job next week. That's their fear.
Right.
You know? So there's not a lot of people investing. Thankfully, the government this week said, hey, we will buy unlimited mortgage-backed securities. So what that means is conventional rates will stay low because we started seeing them hike up. Now comes another issue, is servicing. So everyone announced, hey, you can put off 12 payments up to, if you have an FHA, conventional loan, all that kind of stuff. Now, that might sound good, and I always say, hey, double check with your servicer. First of all, if you're having issues making payment, if you have a job loss, reach out to your servicer as soon as possible. Talk to them about options. But secondly, make sure you read those options very carefully, because most forbearances, if you're skipping 3 payments, you're going to have 4 payments due on that 4th month. And that's almost impossible. Like, that puts you in a worse situation because you're just putting it off. It's not really going to the end of the loan, because the servicers actually have to make the payment for you, and they're
Right.
not the ones that own the loan. So if even 3%, 3 out of every 100 people stop making their payments and go into forbearance, the servicers have trouble. So basically all the servicers are like, hey, we don't want any more loans. We can't take any more risk. So unfortunately right now, FHA and VA and USDA, the government loans, are getting hurt hardest, where you're going to start to see some lenders, it's already happening, change their FICO requirement, maybe increase it from a 580 to 640. Maybe not let you qualify quite as much. Now, there's going to be some lenders that don't change anything, at least for another week or two. But, who knows where we'll be a month from now? There's some people saying it's going to be non-existent a month from now. So we'll see how things are happening. But on a high level is, the people servicing the loans, they're worried that they're going to have cash flow problems. So I'm hoping one of 3 things happen. One, we get back to normal quickly. That's best case scenario. I hope that for non-mortgage reasons too. 2, the government helps out the servicers, and bails them out. It's going to be a bailout, unfortunately, if there's a lot of people not making payments, because they won't be able to make the payments themselves.
Right.
And it's not like these servicers are like the banks before that took advantage of people. These are servicers. These are just the people that are taking the payments, and they get a small portion of the payment. So if they're having to make your full payment and they only make that much profit, they're struggling. So I don't feel bad for the government having to bail them out.
Yeah.
Or 3,
one crack at it, right? I mean, if they miss one payment to the actual investor, they got a problem in their industry, meaning the servicer.
yeah, yep. So the servicer is the one that's actually taking the payment, but there is someone else that actually owns it, an investor. But the servicer is on the hook. So no one wants to service loans right now, because if the servicer has to make 12 payments because you're not making payments, which is take care of your family first, make sure you learn all the servicing. But that's why they're not saying, hey, you can just pay us back at the end of the loan, because they're making those payments for you.
Right.
So it's, a lot of behind the scenes stuff going on. I don't deal with it on a daily basis, but I need to know about it because it impacts our rate sheet.
Sure.
If less people want to service loans. So Lakeview, PennyMac, those are 2 huge government loan servicers. They decided they stopped buying for the most part. So they don't want to service any more loans. So that's created this, FHA, VA rates have started to increase. They've started to become a little stricter on the lower FICOs and all that, on the lower credit scores. Now, if you're out there, if you have a lower credit score, talk to us still, because there's still options out there. I think we talked about this briefly. Like, I have a friend at the bank that, again, they're 660 minimum across the board. We still have lenders that go down to 500. So it's all about finding a mortgage expert more now than ever. Like, it's not, there's a lot of things moving along that you can't just walk into a bank and say, hey, I want this loan, and it's easy. There's so many other factors that having a broker like me, or just any mortgage broker, specifically a broker that has options, is important now more than ever.
Exactly. So guys, the important thing to remember is if you have any questions, reach out to us. Evan could go through ideas. But if you're having any trouble with your payments, make sure you talk to your servicer, talk to Evan. He can help you get. And also, like I said, we're still have buyers getting qualified. It's not that you can't get qualified. We're still closing on deals. It's not that it's going away. It just maybe some of the lenders are doing some other requirements and stuff. But Evan's got so many options. That's what's great about working with Evan, that you can get it done.
Yeah. And typically on a monthly basis, we might use 3 lenders. Now we're using like 10, because it's needed. It's what's best for the client. So,
right.
Yeah.
Exactly. So Evan, as far as renting versus buying, because if people are thinking, well, should I buy now? Blah, blah, blah. And again, looking at the crash before and where we are right now, we're hoping even these things will be temporary, maybe 2 to 3 months. We get into summer. with the therapeutics we hopefully get with the hotter weather, especially in Arizona. And again, we're a totally different market than New York, right? New York
Yeah.
it was already in a little downswing as far as their housing market.
I would not be buying a home in New York.
Right. We're the #1 inbound state in the country, so we've got so many people moving here from all over. And so it's a totally different market. Taxes are lower, all kinds of industry coming in, as we mentioned before. So totally different. But looking at, people, when you buy, you're as bad as that all sounds, and it's really not that bad, but as bad as it sounds, and as hesitant as some people may be, you're still in a better position than if you're renting, right, Evan? I mean, let's talk about the idea of, the median rent in the nation right now, and kind of some of the multipliers that we would use to kind of show the now versus 2008 on that.
Yeah, that's something big that you and I are both fans of. Barry B, financial expert. He was mentioning the stats on the cost of renting for a year versus the purchase price of a home. So that's a good indicator of just the true cost of renting versus buying. And the other thing that plays into effect is interest rates.
Yeah.
But, right now we're about 17 times the annual rent. So if your rent's $1,000 a month, your annual rent's $12,000 a year, the average purchase price for that home is 17 times that. Over the last 50 years, it averaged 16 and change. Right. So that's very similar. We're very normal. Back in 2007, that was closer to 24. So basically the home price was way more expensive than rent, and you had higher interest rates. So the affordability now is way lower. The inventory now is way lower. So all these things show, hey, we're not going to hit a real estate recession.
Yeah, we may see a recession, but not a real estate recession. In other words, yeah.
So those are all positive factors.
The last 5 recessions, these are just some real quick numbers here, and I won't get into it, but 1980, 81, 91, 2001, 2008. So only 2 out of those 5, when there were, recessions, which is 2 bad quarters, by the way, or 2 negative GOP.
Right.
Yeah. Quarters. Only 2 out of the 5 were also affected the housing market. Right. And 2008 was obviously the worst as far as the housing market goes. But again, just to kind of piggyback on that, Evan, let's just kind of run through these real quick. I've got 5 quick things that are like totally different than then versus now, which we've kind of already talked about some of these, but obviously mortgage standards are totally different, right? So, and going through this time, they're even a little bit more stricter maybe through these first couple of months, right? So we've already kind of talked about that. That was back then you could fog a mirror, you could get 3 houses, right? So, prices are not soaring out of control, even though they've been steadily going up since about 2011, 2012. They're not soaring out of control, correct?
Right.
You're with me on that?
Oh, yeah.
So that's a big difference. We don't have a surplus of homes on the market. We have a shortage, right? So again, back then we had like a huge surplus. Matter of fact, we saw a lot of builders go out of business, and there was a lot of land not even built on for many years, until maybe even recently, or not even yet. There's still some out there in Maricopa County, Pinell County.
Right.
Houses became too expensive to buy back in the day of the recession. They were going up so fast, and people were
housing is way more affordable now than it was back then.
Yeah.
Because you have your rent versus buy is cheaper, your income versus the price is better, and then also your interest rates are way cheaper. So way more affordable across the board.
And there's all these little programs, right, that maybe temporarily we're not going to see for a couple months, but for some lenders.
Yeah, right now we have all our down payment assistance programs, but I am telling people, hey, with everything changing, put a little asterisk on this on your qualification, but still helping people for sure.
Right. And And also, people are more equity rich overall than they were back then, as far as the equity they have in their homes. So that brings us to the next thing. Evan, we've talked about this. Again, we don't have crystal balls. I wish I did. Be good for the lottery, right? But, you know, we're figuring 2 to 3 months or, of a possible little bit of, these stricter issues or maybe a little bit of a slowdown for people to get caught up. But probably by, maybe within 3 to 6 months or so, we should see things kick back up, or by fall at the latest, and maybe even see mortgage rates drop, which are different than the Fed lowering the interest rate, which you talked about last week.
Yeah. So a lot of people are discussing that, hey, we have low rates now. That we might see a window, when there's an upside, when we're getting out of this mess, that investors want to get back into the mortgage market,
Right.
that you see rates come down, but before the stock market rallies back to where we were. So
Right.
there is, there's talk that there might be a time window that we'll see rates lower than ever before. Not sure, but there's definitely a good probability. So for people looking to refinance, I tell them, hey, let's look at it now, but don't pay any fees. If you're buying a home, don't pay any fees, just in case we do see a dip later on, because
Right.
you might be able to drop your rate down the road. If you're looking to buy, get ready, just so you can capture that. So we'll see.
So if the rates are lower than you have now, let's pull out some money now if you're a little cash poor going through this period, right? Maybe pull some money out, or if you don't need to right away, then would definitely be a good time. But the important thing, guys, is, and I'm not going to mention any names here, but when we tell you they've dropped and they're like super low, go, because what was it, 3 weeks ago? We were at the historic low about 3 Mondays ago.
Yeah, at the
Some
beginning of
people
the month.
went, some people didn't. Some people got some really good refinances done, and some people maybe were able to pull some money out, and that would have came in handy right about now. But it's kind of like playing the stock market, right, Evan?
It's huge. It's like trying to day trade. No one knows for sure. But the nice thing about a mortgage is once you lock it in, you protect that.
Right.
You know what I mean? If you own a home, like I've had 4 different loans in the last 5 years. If you own a home, it's your choice whether you want to refinance or not. If it makes sense, take it.
Right.
Because you're capturing that. Like, I keep saying this, one in the hand is better than 2 in the bush, that old saying. Like, if you can refinance, plus a lot of our lenders have a float down policy that if rates during the refinance process, drop more than a quarter, we can drop you.
Right.
Not everyone, so definitely talk to me on your situation, but that's what protects you. Every time I've refinanced at covering all the title fees, which has been a brilliant idea. Most loan officers refinance more than the average person just because they understand it. So that's what I like to do, is I help my clients understand, hey, what's the best rate option? I know there's some lenders out there that will be like, hey, here's a 3% rate, which we can get everyone a 3% rate today. Not going to quote APR and stuff, but there's always there's a cost.
Right.
So I know lenders that are advertising a 3% rate today, and they're advertising a cost of like, 15 grand on a $300,000 loan. Not us, but like I would have to quote a specific one and quote APR and all that. But like no one wants to pay $15,000 to get a low rate.
So right now, without paying anything, where's our average rate right now for purchase refi average today?
Yeah, I think it's not our rates, but I think I saw the national average rate was somewhere in the 3.4s. I'd have to give you a double check, or 3.5. So depends on the day, not our rates. Call us for our rates, because what I can tell you is we have people locked from 2.5 to 5.25.
So you're going to be, because you have so many options, you're going to be lower than the national average.
Typically, yeah.
Yeah.
So we're super competitive.
3.4. I mean, if somebody's at let's say 0.5% higher, 3.9.
I just refinanced over a quarter with no fees, because there was no fees, so I didn't care.
Right. There you go, guys. I mean, you know, everybody's going to say, so on a 1/4%, you know, what can people expect on savings?
I mean, on my home, I saved $29 and my loan's like 200 and something thousand. Now, I know that's not a lot, but I didn't pay anything out of pocket, and I also skipped 2 payments, and that's why. And I just refinanced, so that's why it's that small savings, but there's no cost, so I don't care. It's a few $100s a year in my pocket.
So guys, right now, that was the magic part right there, right? Right now, through this tough couple of months, who wouldn't want to go a couple of months without making a mortgage payment and not have to worry about any credit issues? In other words, if you refi now, get a little bit lower payment and go a couple months without making a payment. Kind of a no-brainer.
Yep.
That's the great thing about owning versus renting. You have those options. Later on, you can pull money out of your equity versus renting and throwing the money out the window. I mean, you know, I think that's a big point right now. Who couldn't skip a couple of payments, or who wouldn't want to?
And I'm grateful. There's a couple of my clients that recently lost their job, and we just refinanced with them. We closed before they lost their job. Like, I think one was literally a week and a half before or 2 weeks before.
Yeah.
And they're so grateful because they had some breathing room.
Yeah, just to clarify what that means, guys, if you close on a deal this month, we're in March, you know, whether you're buying a house or refinancing, let's say you closed in March, you wouldn't need to make your first payment until May 1st.
Yep.
So guys, let's say we get started, you know, start refinancing. By the time you close, it's what, beginning of April or whatever, and boom, right? And no out of pocket on the average rate or the lower rate.
Yeah, I mean, I can tell you for over 90% of our refis, there's no cash to close.
Yeah. So guys, kind of a no-brainer. Anything else you wanted to cover, Evan, that we forgot?
No, I mean, just to summarize, I mean, I'm optimistic about the market. Optimistic. Hopefully we'll get out of this soon. We'll see government loans change temporarily. Be careful if you are going with forbearance with your servicer. And then we are seeing appraisals change. So there's some loans that if you don't want the appraiser coming in your home, they can actually do a drive-by. So on conventional loans, there's certain scenarios where that might make sense.
Same goes for guys, if you're thinking about selling, but you don't want people coming through your house. We do video, like 24-hour open houses, kind of like a running video. We could even send you videos of homes that we walk through, so you don't have to go there. You know, we're fine with that. Kind of like, you know, we're sending you a video chat or a recorded video of what we're seeing in the house firsthand.
There's a lot of virtual showings going on. So
yeah, so there's a lot of options there too, guys. So anyways, if you guys have any questions, you know, of course, you know, 480-788-8569 and MincollaGroup.com. And then Evan, how do they get in touch with you?
Yeah, Evan Einhorn, Facebook, online. Give me a call, 602-456-2273 or modernhomelending.com. So.
Hey guys, if you have any questions, you know, always feel free to use us as a resource. And, you know, one of the big things right now I'll be thinking about is, you know, if you're not ready to do something right away, you know, make sure you talk to us about maybe doing something in a few months down the road. Evan can make sure that he can map all that out so your credit scores are booming by the time you're ready to go. So
especially if you're working from home and have more free time now, which a lot of my clients do.
Yeah, we can video chat like this or over the phone.
Yeah.
You know, so
yeah.
All right, guys. Thanks, Evan. Appreciate your time, and thanks.
Have a good week. Stay safe. Thank you.
Let us know if you have any questions.
See ya.